Well, hello folks, I'm L.A. Little, founder of Neoclassical Technical Analysis, and I want to welcome you to this show where we're doing reviews of stocks that mentors have chosen. We do this once a week usually. We try to post it. It's a kind of a live setting, so a little bit raw, but it's from our mentors who have mastered the model, the Neoclassical model, and what we do is we look at these stocks that they have found through their searches and have decided are probably the best trades they want to pursue, and we look at them and we decide if they are or not and how we would go about it. So that's what this show is. Enjoy the show, and I'll see you on the next one. Starting off here, we're gonna do XLU first. Now this is a trade we've been in, right? And so the question here is, well, it's actually twofold. One is why we've been in it so long, and should we have done something different is kind of the issue. And so we got into this thing way back, somewhere over here, $59. It was May 22nd, I think. And so, you know, it goes up, comes back down, our stops were lower, everything's fine, and then we finally get that nice big rush up. Comes back down, goes up, comes back, you know what I mean? It's doing all this stuff, and that's all okay. And all this through here, it's fine. I'm just using the daily to show it. And the reason I'm using the daily is because the daily actually gives us a couple clues. And so, and then we'll pop to the weekly. So, but yeah, thanks for telling me again. So as a weekly trade, to go back with it, but when we got up here, the thing I was going to point out is that everything was going fine in terms of the way this was acting. No signals whatsoever until we actually got below here, right? Which said that this thing's probably going to go sideways on this time frame. And so that gave us a little bit of a clue that, you know, maybe this thing's not going to, just break out right away. Well, it gets up here and it breaks another high, but then it comes right back down and breaks underneath it again. Reconfirming one more time that this thing's probably sideways on this time frame. And what does it do? It goes back up here, right? Test those highs again, still can't get over them. So the whole thing I was using the daily for was just to say, a couple times now it's told us that this thing wants to consolidate versus just break out. And so let's go to the weekly. So on the weekly time frame, going back to here, and so the entry on the weekly would have been right about this price point. And so on the weekly, if you pull in the swing point high, we've tested it 3 times now. And so we're kind of getting into the point where it either has to, do something or it's not going to. Now, if I just look at the bars themselves, right, the candles, everything still looks fine. In other words, you get a long tail here, long tail there, decent tail here. These were a little bit more suspect, right? Pointing to more consolidation. And those dovetail with what we just saw in the daily. So, going back to this, it's like, okay, at this point, and we've pulled the stop up 2 or 3 times now. So the stop is just up underneath where the lows are here. And that's where it should be. We've done everything money management wise that we should do. And so our stops are just underneath this long tail. And so I think that if anything, I would simply just keep the stop tight, maybe even tighten a little bit more, even pull it up into a profit and say, you know what, you're going to have to go up or I'm just going to get out. And that's the way I would look at this thing, right? It still hasn't done anything wrong. And if you think about the market, we should see rotation back into this group. And so a lot of times, you'll go into something. That's one of the hard things about options, for example, is you go into something, the options require you to have your timing perfect, right? Or reasonably perfect. Or you've got to pay a premium. And, sometimes these things will take 5, 6, 7 weeks, even longer. And you just sometimes got to wait them out. In this case, it's taken 3 months already, and still nothing. And so, if you're looking at it from a portfolio point of view, and you don't have a lot of stocks that are just sitting there going sideways, it's okay to have one going sideways, right? You just wait it out. You just put your stops up, pull them up. Okay, I can't hardly lose. That's okay. And if this thing eventually takes off and the money rotates back to something safe, then we, finally get what we look for. So that's kind of the way I view it. And I don't have anything else to say about it. Do you have any other questions or thoughts? Yeah, and so the comment here was, you got an ABCD that's in place, right? And the ABCD is the one from, I assume it's from right here. It goes up to about there, comes back down, and then, goes back up, and it shoots to about 60, what was it, 3 or 4 you said? 64. And so 3 on 61 is 5% basically, right? And so there's a decent upside if this thing actually actualizes and pushes up. But again, I would do like I said, I just keep the stop tight. Maybe you don't press it, but you really don't want it to come down in here very much more because the odds increase every time it comes down. What we've done in the studies that we've done so far is if we decided that about, 83% of the time, right? 84. About 84% of the time on the work that we've done so far, we still got to do more work on this, but of the work we've done so far, once it actualizes, in other words, once it gets over the B point, right, odds of it getting to there is pretty high. And that says that, you want to stay with them because most of the times they're going to get there. But a lot of times well, not a lot of times, but sometimes it takes a long time to get there, and that's what's happening. And there's nothing wrong with that. And again, like in our portfolio, this is one of the ones that we don't really, we don't have a lot of them this slow. There's a couple in there I've had as well that are, it's actually a spread, and it never will work, I guess. We've had that thing on for the beginning of the year. So anyway, I like it, still fine. Slow performer, yeah, that's okay. Utilities usually are anyway. So I think it's all right. Let me see. There's a couple in here, and both of these are going to look the same. One of them's, oh, you know what I didn't do? I'm going to do this first, is I'm going to go back and look at the SPX real quick. Yeah, because on this guy, the S&P 500, plus, excuse me, if we look at what's happening with the market, right? Because we usually try to take, or at least I always think it's preferable if you take a big picture view and say, okay, where are we, right? Because we know that general markets influence sectors, which influence stocks. And so when we looking at this scenario, right, we want to know what the big market's doing. And so on the big picture here, the daily, this thing's totally broken down. It just blew through all these swing point lows. There was a swing point high here that was a bullish retest regen that failed. It failed right there. And then we had the second one. Now this one was the bullish retest regen, and this one had never been tested. And on the break back down, it actually did a full retest regen, which actually is a little weaker than you would like. And then it regenerated, or is at least tempting to regenerate. Came back down, tested again today, got very close price point wise, but flipped around and does another hammer reversal. This thing still wants to try and push back to the top side. If we go to the weekly real quick, is the weekly has kind of a range trying to set up, right? We have again, going back to these bullish retest regens, you have one here and you got another one over there. And right now, it's actually holding both of those. So this little area right here is where it is. End of the week will be a couple more days, assuming it closes up here somewhere. Yeah, it gets under, comes back in, holds. That says nothing's wrong with it. Everything's still as it was. If it doesn't, if it closes down here somewhere, that's a failed bullish retest regen that tells us what was up, probably sideways, on this time frame. And so we don't have that yet, and so far what we have looks okay, and we'll just have to see where it ends at the end of the week. But right now, it's looking more like, at least near term, some sort of range. Now, going to these other two. These two stocks are doing the same sort of thing, right? They have almost the exact same setup. CDNS, daily, does the same thing, blows away a bunch of swing point lows, comes back into a retest regen, or actually two of them, fails them both, right? And now is going to attempt to at least bounce. So this on the daily, weaker. Go look at it on the weekly though. On the weekly, it's coming back into a retest regen, and we'll see if it's going to hold. Looks like it is. If this holds like the big picture market, right? Nothing wrong here. On the daily though, it's telling us that we've got some issues and that it's probably going to take a while before they're resolved. And so I think what we all should be thinking at this point in time is, yes, we still give it the benefit of the doubt, and we still say, yeah, the market's still bullish, but short term, it's probably going to trade sideways for a longer, some longer period of time. And we potentially, and we hadn't talked about this, and I'll go back to S&P right quick, put it on the weekly one more time. We're potentially going to get a scenario where it goes down, comes back up, and then fails somewhere up here, and then tries to regen down with an ABCD structure. And so that's the risk, right? And this risk here, this move here, is usually the one that kills you. It's the second one. It's not the first one usually, it's the second one. The reason I say that is usually when you come off the top, right? You're at the highs. When you come off the top, market's still very bullish. As soon as people think this thing's turning, they're going to all jump in it. And that's what you saw again today. You got down on the daily. You tried to test 2 days ago, Monday's low, and didn't get there. And what do? The money just rushes in and the thing pushes up back towards the highs. That money just wants to come into it. And that's usually the way it is, right? And so it's usually not the first one. It's the failed bounce that then gets the whoosh. And so that's what you have to worry about as this thing comes back up. So any trade you're making now, you have to think about them first from the perspective of a range trade, small trade, right, in terms of time. And so the CDNS is that way. The other one here, EME, is the same way too. Daily blows away a bunch of stuff, right, saying sideways. Here it's trying to hold on a bullish retest regen. And this one was second test, basically. Well, I guess you could call it third test, but it looks like it's going to hold as well. So yeah, these are okay to trade, but just think, you're thinking range. You're not thinking taking off on another leg higher. It's a different deal if you're taking off on another leg higher. And so your trade equation, you wouldn't want to, for example, if I was looking at this stock, I wouldn't want to take this ABCD structure and assume I'm going to go and complete it up here. Right? I would assume that my difficulty is going to be right in there. And so my trade needs to make sense from that perspective. There's my reward. Maybe here's my risk. Right? And that's still okay, but you got to think about it from this perspective. And if you get the extra, that's fine. That's great, right? Everything works out. And that's why you make trades when you trade the bounces like that. Okay, last one, GDX. GDX is gold stocks. There's an ABCD structure. I'm going to go straight to the weekly. There's an ABCD structure here on the weekly, and it goes from this point here up, back down, and up again. Price point on that was right at 30, I believe. Let me look at my numbers again. Yeah, it was right at 30. Today it hit 30. Hit it on the nose, right? You got to take your money here. You got to take some of it. And if you're in this and you're playing this, yeah, volume buildup's great. Everything looks great, right? But when they hit their ABCD structures, what do they typically do? They turn, they go back the other way. I've been heavy in gold. I've been beating the table for gold probably 2 or 3 weeks now, and saying, this thing's doing what it should do. You should be in it. If you're in it, really seriously, think about taking some money. All right, that's it for today, folks. Thanks.